For more on Groupon's adjusted numbers, let's bring in Bloomberg contributing editor Paul Kedrosky, a longtime tech investor and author of the blog Infectious Greed. He joins us now from San Diego. Paul, we have talked about this for months. Now this all comes to fruition. I mean, what a fiasco.
Hey, what a fiasco. I have to say, though, I had visions of Corey in his Fortress of Solitude stroking his goatee and laughing diabolically like that guy in the Muppet movie. But yeah, I mean, it's a complete fiasco. And I think what's worth remembering, once you cut through all the sort of the financial jargon and the accounting mumbo-jumbo, is that this is an issue that's very similar across many companies that have accounting restatement issues. And it has to do with reserve accounting, which is essentially how much money should I hold back to account for products or services that aren't used or are returned. And there's a thing that companies are overprone to do at the end of quarters and at the end of fiscal years, and that is they encourage their sales force to go out and sell X versus Y, where X is something that has a higher margin and often a higher price, but generally a higher margin. And the game you play, if you go out and you tell your salespeople to sell the higher margin product at the end of the quarter and you give them free dinners and whatever else to do it, is you don't reserve against it sufficiently. So you don't say, well, even though this is a higher margin product and it's got a higher, higher likelihood of returns, I don't reserve against it. So that way, I get to kind of play this, coin-operated end of quarter game where I juice my earnings. I don't have to take reserves against it. And then later on, of course, we realize that we're going to have to take much larger reserves against it, and you see this kind of restatement. That's the part that's troubling for me. Is it's the kind of game we've seen many, many times, and it's generally a reflection of very poor internal controls.
There have been so many questions leading up to this about Groupon's accounting methods, and I'm sure I'm not going to name names, but there are plenty of critics out there right now saying, I told you so. What about the investors who gave Groupon a chance? Do you think some of these guys are going to say, I'm not going to give them a second chance now?
Yeah, I think this is a real blow. I mean, granted, as I think it was John earlier alluded to this, that there isn't, in terms of loss of confidence, there really wasn't that much further to go. This has always been a show-me stock in that sense. So, there wasn't a huge loss of confidence to go ahead. But nevertheless, finding out that, the end-of-quarter reserves weren't at a level that they should have been, and probably the company knows that they should be at, given that they know what the returns look like on their product mix, is not going to build confidence. And as you said at the beginning, in the 10K filing, I think there's a strong implication there that this could take some time for them to sort out, and there could be further calls against reserves ahead, and therefore further restatements. So there is nothing in there to build confidence yet. So any sort of notion that now all the dirty laundry is out and we should feel great, I think is way too early.
So you think there's a potential for more revisions ahead? What specifically are you going to be looking out for?
I think more of the same. This is the fundamental issue for me. Is this is a company with a very complex relationship through the discounting system back to its end customers, and the one that's fluid and changing over time. So this notion of what reserves they should take and what sorts of things you can do as a company to get those higher earnings in that you think your investors want, and how you're reserving against product mix issues, is something that is deep, complicated, and prone to all sorts of abuses if you don't have the controls in place to work in favor of your investors. So I'm going to look for more of the same. I want to see in the next financial statements from this company that they have gone through in a very detailed fashion all of this to show that we are reserving properly against sales, and this cannot happen again.
Now, you've said this is a big blow, but let's look at the actual numbers. A $15 million operating income gain as opposed to a $15 million operating income loss, which is what they've reported now. It is a 200% difference, as Corey pointed out, but are the numbers really that dramatic when you think of it as a company operating at the scale that it's operating at?
Yeah, and that's an important point. I mean, in the great scheme of things, these are not gigantic numbers. And so you ask yourself, should I be expecting the stock off 15% on those numbers? Absolutely not. And I think it was off like 5% last I looked before we came on in after hours. I think for me, it goes more to the question of trust. Do we believe that the controls are in place for this company to be run in a fashion reflective of a credible, large capitalization public company? And this has always been the concern with Groupon, that the company had been operating in ways that suggested things were happening faster or looser than we might have hoped for from a large, hopefully liquidly traded public company, and this is going to create that same nervousness. So size aside of the restatement, the issue is one more reflective of what are they doing, what do the controls look like. Immaterial weakness in things that directly affect earnings at the end of the quarter is something I never want to hear or read in a financial statement.